But so you can own it directly. You can own GBTC. You can own MicroStrategy, which we do personally as well as in our funds. The thought process on MicroStrategy is a little more broad than just Bitcoin in and of itself, because if you look at what Michael's doing there at the helm, he obviously understands math very, very well. And when the shares trade above the enterprise value of the firm, trades above the intrinsic value of the core business, plus the underlying value of the Bitcoin holdings, what I think he's going to keep doing, it's been a pattern so far, is he's selling shares when it trades above that. So when it's trading at a rich price, benefits shareholders to sell shares and then buy Bitcoin with it, right? And potentially, if the shares ever get massively undervalued relative to the value of their holdings, he could potentially buy back shares. So there's a very interesting mathematical component there at the helm of that enterprise. I think there's also massive optionality longer term for being the largest corporate owner of Bitcoin in the world, not only from a financial services perspective, but all kinds of other things. So you can own MicroStrategy. We love that as a way to get exposure. You can own miners. There must be a private company, huh? No, well, you can. It's very liquid. It's very public. You can see exactly the status of the entire network and technology 24 hours a day, 7 days a week, 365 days a year. There has never been a currency or monetary payments system or network in the history of the world where you can say that. And, maybe you don't care. Maybe everyone in America doesn't care because the dollar is relatively stable versus other governments, but I care. I'm paying attention to what's going on with the currency supply. People don't understand how the system works are paying attention to the currency supply and what's going on. The Fed lets us know every month what's going on, But this is the information around Bitcoin is unprecedented in terms of what you own and what's going on with it. And I think that's immensely valuable. So it's done a lot better than be just a store of value over the past decade. Artifacts, stuff like that. That'll eventually be priced in Bitcoin, capital goods kind of things. Everything else, you can deal with a local government or some sort of other depreciating currency or medium of exchange. And so I think that's eventually how it eventually shakes out. It's many, many decades away potentially, but that would make sense to me from a theoretical perspective.
Mm-hmm. It's basically the once you get the pricing, then that naturally leads to the medium of exchange because people are actually using it as a unit of account.
That's a fair way to think about it. From a medium of exchange perspective, the Lightning Network has immense potential when you look at the transaction throughput relative to Visa, MasterCard, other alternatives. So I think that could eventually continue to supplant. That will eventually, hopefully, take over from a medium of exchange perspective. But what the point I think we're dancing around here, which is people don't necessarily think through, all right, this is illegal. I mean, sure, but that's some crony stuff, right? Like, we hope the US doesn't work that way. Also, if you look more broadly around the world, the trend is positive, unless you live in a dictatorship, right? I mean, El Salvador, now in Argentina, you've got a pro-Bitcoin president. Japan is talking about lower regulation. Germany. So everywhere around the world, the trends are very, very positive. You also hope that the US gets it right? Like, generally speaking, from my perspective, the US is fantastic because they get most things right. The system of governance is better than in other places. And you hope that the system understands that technological innovations, such as the context I brought up earlier, should not be stifled and shut down. There's going to be a hesitancy to do that until it's absolutely necessary. And politicians will keep trying to tighten the screws, but the response has not been all that positive, right? I mean, you have certain loud voices that benefit from centralization speaking out against it. But in reality, people don't want centralized power, So longer term, people say, oh, this is a libertarian fantasy. Well, most people are libertarians at heart. They don't want to be told what to do, right? I mean, who sits there and says, yes, I want the government to come out and tell everyone what to do? No, every one of our generation says, I'm fiscally conservative, but socially liberal, right? Okay, well, take a look at Bitcoin then. So I think people will be hesitant to leave until it's absolutely necessary, and there's no sign yet that it is necessary. Stablecoin is just another fiat idea, right? It's because some central entity says it's worth this, it's worth this. Also, the US government certainly seems to be most focused on not having that. They view that currently as the biggest competition. Bitcoin eventually becomes a stable coin, I think, in the next 10 to 20 years, effectively, not from an underlying technology perspective, but the volatility goes way down as adoption broadens out and people understand, hopefully, the benefits of the underlying system. So stablecoin is not something we own. It's not something we've seen any reason to own. We're not involved in those. It is the ultimate financial system collateral, right? Because you know exactly where it is. It's completely transparent. There is no better collateral for if you want to actually run a bank. That's what they should be holding. Maybe not today, given the volatility of it. If they don't, from a it's acceptance perspective, but longer term, that's really where all of the value lies, is in that tri-party ledger that's secured by more computing power, well ahead of every other coin, and no one will ever catch up to it. So it is the ultimate collateral longer term. People don't necessarily realize that. They use it as a trading instrument. Part of the issue with trading stuff is you also then have to pay taxes on it. So if you realize a big gain, the only thing you know for sure when you realize a big gain is that you owe somebody money. So at the end of the day, if you look back at what's happened with Bitcoin for the past 10 years, I personally sit there and say, I'd rather not pay taxes on this right now. I'd rather hope that this 10-year incredibly strong trend continues and sell something else instead if I need to raise money. But it sounds to me like that's more of a investing style perspective. If somebody's choosing between NVIDIA, the rejection was completely capricious. Certain people don't want it out there, but it's ultimately, I feel like it's baked in the cake. I think for me, a potentially interesting question is, okay, day one, does ETF approval mean Bitcoin goes to the moon, or does it mean that the supply demand you could see that the supply demand balance potentially going the other way in the short term and Bitcoin going down on that, right? Because then people can actually demand. And then the marginal supply, all pricing happens at the margin. The marginal supply gets cut in half. What happens when the marginal supply gets cut in half? Only one thing, the price goes up. Unless the demand changes or the bottom falls out. So people always talk about markets are perfectly efficient. They're not perfectly efficient. And, there is a catalyst every 4 years for Bitcoin. Parts of your life, and you can pull away the insight statements from those institutions or whatever, right? So business school, one of my key learnings was, this came from the real estate class, like always be in a growing market. You don't want to be in a market that's shrinking. Like growth solves a lot of problems. Mutual funds are a dying wrapper. They're less tax efficient than ETFs, so they're hard to compete in. I'm excited just to get into a growing wrapper in terms of the ETFs. But if you think about how do you outperform a broad-based index, there's two ways to outperform a broad-based index. You can manage systematic risk, which is just your overall exposure to the market's basket and risk, right? And then there's the unsystematic. You can manage the unsystematic risk, which is what do you own in what weights and how does it differ from the underlying index. And so these two ETFs, effectively, one is trying to take on the overall exposure aspect in a systematic way. So when do you want to be levered long the market? Can you time your leverage or use market-based indicators to efficiently time your leverage?